Thursday, August 3rd, market analysis, Stan Ehrlich. I start out with the indexes as usual and the S&P 500. The spider in particular is rallying a little bit at the moment, now up on the day, a slight bit, about 44 cents, which is a very small amount. But it did close an opening gap completely without a doubt and is now up to and a little higher than unchanged. So we're on our way down from some sell signals that we got at the top, the high of the market. Daily data chart coming up. Here we are. There's the high day in an area of resistance, and that's my little blue horizontal bar, and an ER, bearish engulfing, overbought conditions, sell signal. It worked very nicely, not quite as nice as some of the ones we've seen before. Like October 13th, the buy signal was unbelievably perfect. So, have we finished this decline? Nah, I don't think so. I want to come down to 444.00 in order to close the gap. In fact, it's a little bit under that. It's more like 443. So 444 is a little easier to remember, and it's in the middle of the gap area. So 443 is a little bit more accurate. It also starts support. So I'm fully expecting that the market is going to turn around and start to go back up again once it gets down to about 443.20 or what. I'll tell you exactly what the damn number is. 442.97. So yeah, it is exactly 443 instead of 444. Fine. I think this rally is going to stop that we're involved in right now today and turn back down. What I want, and I don't always get, is for the market to get oversold. That's down to 25 or lower on my custom relative strength index, and maybe gap down the day it gets into 443, but it can get a little lower than that. That's only the beginning of some support, and it's a closure of a gap. So there's a chance it might even get down to all the way down to 432, but somewhere between 443 and 432 is probably where it's going to turn around and head north to make new highs for the whole trend. Okay, enough of the S&P. The DIA is going to have something similar. There is a small gap to close right around 350. Pretty small, but it's there. It is also slightly higher on the day at the moment, only 25 cents. Excuse me. No gap to close. So it doesn't have to go back up and close the gap like we saw. And I didn't point out on the spider. There it is right there. That little green zone. And that was from yesterday's significantly lower opening and fairly significant decline. Remember, yesterday we had a downside breakout. It was new low and new low close for about 10 days. So I'm not surprised that we're bouncing a little bit, and a little bit's the operative word at the moment. The same kind of commentary applies to the NASDAQ. It has a small gap to close from yesterday's lower opening, and I think that's going to get closed on the way back up again, and it is going to not stop a rally. But the gap closure below the market for the triple Qs is going to occur at 368.63, and that's not too far from today's lows. So we're kind of close on the Qs, not too far away on the DIA, and a little bit further, so to speak, on a spider. We'll see how these go. Coming down, close the gap, maybe get oversold or real close, and then turn back up. What about the Russell 2000? Well, it trying to bottom out at the lows of the last 10 days this morning and held, but I don't think that's going to last long, and turn back down. There's no gap above the market for the Russell, and there is nothing particularly important except for support area at 189, 180, 189.80-ish, where it is probably going to hold as far as the beginning of support is concerned. And that's it. A little bit more of a decline, maybe a few more days. It may take less than that, and then turn back up in the stock market indexes. We'll look at futures. I started in this futures industry in 1971 as a runner on the Mercantile Exchange and Board of Trade in Chicago. Lasted about 35 years as a broker or broker's license, and then a variety of other things since then and during. Anyway, it's my original entertainment for the investment industry, the futures industry. We got an 88-day cycle in the U.S. bonds, 30-year long bond. It is now significantly oversold. It is now challenging the lows back in October of last year, October and November. It is ripe for a turnaround and the beginning of the next significant, maybe really important long-term beginning of a rally and bull market. I got to say that because you're going to have a broad double bottom formation. We all know interest rates have been big problems. We all know it's slowing down. And it's just the fine tuning of how interest rates are going to turn around and start to stabilize, if not drop maybe a little bit, but not necessarily this year, maybe early next year. But the markets move on anticipation up and down in advance of it happening, and they reverse on realization. One of my favorites. Markets move on anticipation and reverse on realization. So I think we're very, very close to turning back up again in interest rate futures, and that applies also to the 10-year notes. And we'll get to that right now. Here's the S&P E-mini, same as the spider. Here's the soybeans, which it's out of order, I'm sorry, so I'll have to cover beans. Yesterday's new sell signal, I don't like it because it's close to being oversold at the time that it happened, but it did have an outside down day within the allotted number of days of previously being overbought. As a result, it turned red, rightly so. Probably going to change the code in the futures to eliminate this particular signal yesterday, but so far so good. It's rallied back up from the middle of the range of yesterday, and that is where you want to go short if you want to do that for this particular signal. The one that's obviously the good one was a few days ago, and it just simply went straight down after the new short. Remember, anytime you see red or green bars, ER1 is immediately long during the same day or short, in this case short, of course, and the ER3 needs to hit the little red dots in order to get into a new long or new short position. So ER3 misses sometimes, and sometimes it gets into a better position price-wise than ER1. Anyway, next chart. 10-year notes, good. Double bottom possibilities on a short-term couple of month basis, but also on a very long-term 170 or so day, 88 times 2 basis. The cycle is great on the 10-year notes as well. It's not quite oversold yet, but super, super close and looking like perfect territory to turn up. I'm a little disappointed it didn't hold better in that green support area, but that's the way it goes occasionally. Next. New short signal yesterday in heating oil. We rallied back up today, so not only ER1 is short, but ER3 now is also short. So it is pure and simple. I want it to go down from here, point blank. Next, natural gas. Not much to say. Long-term bear trend. I think it's going to break out to the downside very soon. Next, gold. 2 sell signals recently, working great. Period. I'm expecting to see lower lows in June and the lows back in March challenged and maybe even broken. But let's get there first. Bearish on precious metals. Here comes silver. Also, 2 sell signals recently, one of which was right on top of the market, the high day. And going back to gold, it was also on the high day. Silver's been giving us some unbelievably great signals. Not that that's going to continue. You don't know. Past performance is not indicative, etc. So we had a fantastic buy signal in silver. I think also in gold, March 10th. a double top with both highs being ER sell signals, with a complementary, so to speak, sell signal a couple of days later, and crash the next day. At the bottom of the break, we got a buy signal. Just great. And a nice rally. Okay, now we've recently had a sell signal that's doing just great. I'm expecting a challenge of 22.3 and probably lower prices after that. Let's see what happens when we get down to about 22.3. Next, not too much to say here in platinum. No signals that were particularly great recently. Last December, there was one on the top, and in February of this year, there was one on the bottom. So, looking for it to go down and break into new low ground below 900 easily. Next, high-grade copper. We got a great sell signal 2 days ago. Yesterday, down big time. Today, we're popping back up a little bit. No particular surprise. I think we're going to continue to work our way lower. I'm looking for a challenge of these recent lows, May and late June. Next, no particular signals lately in soybeans. We already looked at soybean oil, sorry. And I'm bearish because I think the grains as a group are going to go lower. Next, we got a sell signal yesterday in soybean meal. Now, I think the market did come up high enough at 403.20 today to stop us out by 2 ticks. What a shame. Right near the high. So we have a small day trade loss today in soybean meal. Now, this sell signal yesterday does not necessarily, just because we got stopped out, mean that it's not going to go down more. I do think it's going to go down more. Maybe I'll get another sell signal in the next couple of days. We'll see what happens. But I'm bearish. Next, looking for a continuation move down in corn. New lows, and probably for a very long time period. Now, this is progressing a lot like soybeans. Corn is already at the lowest lows for many months. Soybeans are just starting to come down from the double top. Corn didn't make a new high. Beans did make a new high, and that's in the last month or so. But both of them are doing around the same thing, approximately the same thing. Corn's just leading the way down. So looking for new lows on a break here, period. Wheat, same commentary in general. I told you it was bearish in general in grains. And we did stop at the resistance area. I pointed out a couple of weeks ago, unfortunately, we didn't get a sell signal. We don't always get signals that are as unbelievably fantastic as the one that we got at the top of the bull market March 8th. That is a impossible sell signal. Limit up bid, locking limit up bid for days in a row, and then all of a sudden, my system is screaming, sell it. What? You got to be crazy. It worked. Next, live cattle at the high of the rally. New short sell signal, doing just fine. Fiddling around for a day or two here. So I'm looking for new lows very quick, very soon. Next, lean hogs. I don't know why they call them lean. They should be calling them fat hog. Anyway, little double top recently. I'm looking for these lows to be broken, getting down under 80. And probably a move all the way back down to 65 and even lower. The trend is obviously down and for quite a long time, and we did get a sell signal on the damn high day back on February 23rd, well over a year ago, but that's not the point. The point is it has a sell signal exactly when you want them. Next, OJ. I hope I can say that in months to come for OJ. We just got a major sell signal a few days ago in extreme overbought conditions, looking for a move down to at least, as I've said for days now, 290, probably to 278. And I don't know, it may not stop there. This could be a top of significance longer term. So far, though, you got to say it's a bull trend. We haven't got any major indications the trend has changed. By the way, question mark, how do you define the trend with a bull trend line? Over how long a time period? What kind of chart? New lows for a certain period of time or new highs for a certain period of time? when you use the word trend, it's nice to define it. And in this case, you can see the trend line. So that's what I'm defining as the long-term trend, that trend line. Next, cocoa. Sell signal involved in the topping out process. Today, we have new lows for about a week and a half, and probably a new low close, and probably the beginning of a more significant decline than this. So I'm looking for a move down to, more likely than not, at least 3,414, and maybe, probably, to test that major bull trend line as well. So there's your definition, the trend line. Next, cotton the rag. And again, ladies and gentlemen, we have a bearish engulfing ER sell signal on the damn top day. But in this case, wow, right in a resistance area, exactly where I wanted to have one. This one's fine. So far, so good. I'd like to see it close close to today's low or under today's lows very soon. And sugar, minor new low, top building, expecting it to come down to at least 22, probably into the 2018 area, that big blue support area. Next, and coffee, lastly, although it's what I get in the morning right away first. So bullish engulfings during the bottom, but unfortunately they weren't the lowest lows. And I am expecting a little bit more strength, a little bit more of a rally in coffee. It's a little bit iffy. I'm not real confident about my commentary in coffee. Take it with 2 grains of salt. And we're back to crude oil topping out yesterday in a resistance area, bearish engulfing, looking very bearish, low risk here. If you sold short here, your stop should be just a little bit above 82.44. That's not a real large risk. And if you're right about this, it's a little bit gutsy because you don't see it already trending lower. Trend is your friend, but if you're going to catch the beginning of it, here it is. I think. Okay, back to bonds. We've done it. Talk to you tomorrow. Have a great day.